Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets that big companies try to bury. Today, we're diving into an amended report from Walmart Inc. And let's just say they're making some interesting moves behind the scenes, especially when it comes to their top leadership. First off, this isn't a brand new report, but an update, an amendment if you will, to a previous one. It's like when you get a correction slip for a book, the main event here is about a leadership change and, more importantly for us, the financial details tied to it. We're talking about John Furner, who is set to become the new president and chief executive officer. This report gives us a peek into his compensation package as he steps into this massive role. Before we get into the nuts and bolts of Mr. Furner's pay, let's quickly look at what Walmart has registered with the SEC. You know, their stock which trades under WMT on the NASDAQ, that's the main thing. But they also have a whole slew of bonds, like these 2.550% notes due in 2026. Or the 1.050% notes due in the same year. Then there are notes maturing in 2028, 2029, 2030, 31, 2034, 2035, and even out to 2039. This shows Walmart is a giant borrower constantly raising money through debt, which is pretty standard for a company of its scale. They're basically managing a massive financial structure to keep the retail empire running. Now the report is dated the 16th of January 2026, but the actual event it is amending happened back on the 13th of November 2025. This is an amendment to a prior report about John Furner's appointment as the new CEO, which becomes official on the 1st of February 2026. So, while the document is signed in January, it is detailing decisions made in November about leadership starting in February. It is a bit of a timeline puzzle, but it's all about officially documenting these important shifts. The heart of this filing lies within item 5.02. This section is all about changes in company leadership like departures, elections, and appointments. For us, it means digging into the compensation details for key people. And in this case, it is all about John Furner, the incoming CEO. This amendment is specifically to add more information about his pay package. Let's talk money. As of the 1st of February 2026, Mr. Furner's base salary will be a solid $1.5 million per year. That's the guaranteed part of his compensation. For a company the size of Walmart, with millions of customers and thousands of employees, this might seem high. But it's pretty much in line with what you'd expect for the CEO of a global retail giant. It's the foundation upon which the rest of his compensation is built. But it doesn't stop at the base salary. Walmart also has incentive plans, and for the fiscal year ending the 31st of January 2027, Mr. Furner's target bonus is a huge 240% of his base salary. If he and the company hit all their goals, he could potentially earn up to 300% of his base salary. To break that down, his target bonus could be around $3.6 million, and the maximum could be $4.5 million. This means a massive chunk of his pay is directly tied to performance. They're making sure he's motivated to drive results for the company. And by extension, for the shareholders, it's a classic pay for performance setup, common for top executives. Now we get to the really juicy stuff, stock awards. For the fiscal year 2027, Mr. Furner is set to receive an equity award valued at approximately $17 million. This isn't just free stock handed to him. It's mostly performance-based restricted stock units, meaning he has to achieve certain company goals for them to fully vest. About 85% of this award is performance-based, with only 15% being regular restricted stock. This is a significant amount of money, and it's designed to align his long-term interests with those of the shareholders. When the company does well, he benefits immensely. When it doesn't, his potential payout is reduced. This is a key way companies retain and incentivize their top leaders. On top of the annual equity award, there is a special one-time grant of performance-based restricted stock units worth about $10 million. This is a special bonus for stepping into this significant role. About a third of this award will vest after the first year of the grant date, and the remaining 2/3 will vest after the second year. This layering ensures he has immediate and longer-term incentives to perform. It's a way to reward him for taking on the top job and to keep him focused on delivering results over the next couple of years. So, what does all this mean? Walmart is clearly investing heavily in its new CEO with a compensation package that heavily emphasizes performance and long-term value creation. This is a massive commitment, and it signals the company's confidence in John Furner to lead them forward. His pay is structured to reward significant achievements, aligning his personal financial success directly with the success of Walmart as a whole. Looking at the broader picture, this move and the associated compensation package suggest a strategy focused on growth and shareholder returns. The company is essentially putting a massive bet on its new leader, and his compensation reflects the immense responsibility he's taking on. Now, looking at these results more broadly, Walmart Inc. is in a unique position. As a retail giant, they face constant pressures from online competition, changing consumer habits, and economic fluctuations. The bond issuances we noted earlier show a company that is actively managing its debt, which is a critical part of its financial strategy. This kind of strategy can allow them to fund expansions, acquisitions, or simply to manage their cash flow effectively. However, managing a large debt portfolio also comes with risks, especially if interest rates rise or the economy slows down, making it harder to service that debt. The compensation strategy for Mr. Furner is a clear indication of the company's priorities. By tying a large portion of his pay to stock performance and specific company targets, Walmart is signaling a strong focus on increasing shareholder value and achieving ambitious growth metrics. This is a common and often effective strategy for large corporations, but it also puts a lot of pressure on the CEO to deliver. The success of this strategy will depend not only on Mr. Furner's leadership, but also on the company's ability to adapt to the ever-evolving retail landscape. Now, for our take on everything, Walmart is without a doubt a dominant force in retail. They have incredible scale and a vast customer base. The leadership change and the associated compensation package indicate a commitment to strong executive leadership and a focus on long-term performance. The big question, as always with companies like this, is their ability to innovate and adapt. Can they continue to fend off agile online competitors and changing consumer demands while managing their massive debt load? The substantial equity awards suggest the board expects significant future growth and profitability. They're essentially betting big on their new CEO to deliver. The risks here are pretty standard for a company of this size and industry. Economic downturns, increased competition, supply chain disruptions, and shifts in consumer spending habits are all constant threats. However, Walmart's sheer size and diversified business model provide a certain resilience. The opportunity lies in their continued expansion into e-commerce, leveraging their physical stores as fulfillment centers and potentially exploring new market segments. In conclusion, this amended filing gives us a clear picture of the financial commitment Walmart is making to its new CEO, John Furner. It's a strong vote of confidence and a clear signal of the performance-driven culture they aim to foster at the very top. While Walmart is a titan, its continued success will depend on its ability to navigate the challenges of the modern retail world. Alright, that is our breakdown of Walmart's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this compensation package is justified? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord server linked in the description for more exclusive content and discussions. Thanks for watching. See you next time.